Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your favorite dividend investors here, Bert, the Herd, and Lanny, guys. And today, we're going to have to take a little seat at the table because we're going to have a little story about what dividend growth has been like in 2025 and kind of some expectations to set here for the rest of 2025.
Smash that subscribe button, everyone. Give this video a thumbs up. How are you boys, the Dividend Diplomats? We're always watching dividend increases. We're always monitoring that news wire, seeing how much our income is growing, and sometimes getting cut when companies decide to rip the cord out, cut that dividend. 2025 has been an
Cut that umbilical
interesting
cord.
year, to say the least, hasn't it, Lanny?
Yeah, it's been interesting. There's been a lot of dividend increases. Gotta love that. You gotta love the fact that dividend increases are happening. We're gonna start off with this positive note.
Yeah,
Dividend growth is still happening
for sure.
despite so much wildness
Yeah.
within industries, within business, within the markets. A lot of uncertainty, as Bert and I keep
Yeah.
talking about. But we're noticing a few trends already about a month and a half in 2025, and it's hopefully helping us set expectations for how we are, foreseeing dividend growth in 2025. We've had some dividend cuts, we've had some dividend suspensions, but we're going to cover 7 to 10 dividend announcements
Yeah.
and kind of just talk about kind of what that might mean for the rest of the year based on what we're seeing.
Yeah, again, 7 to 10, not every dividend increase. Of course, there are going to be some that crush it out of the park that we aren't covered. These are ones that we're highly covering that are in Lanny's portfolio. Almost all of them are in my portfolio as well. So it's something that we're tuned in on, knowing that this is generally what we're seeing, and we want to flag it and make sure everybody else is on alert for it.
Yeah. And thanks for rocking with us, guys, on Sunday morning here.
Yeah.
Both Bert and I are recovering right now. Bert's had a cold for weeks, months, practically, and I've been up and down. I had a battle for about a week, had 2 good weeks, and I feel like something's coming back from
Yeah. Ever since he got thrown over the rope on Royal Rumble, he just hasn't been the same.
10, 9, 8. But guys, dividend growth, let's kick it off. So, again, we got a lot of increases here. This is not a dividend increase video, but this is just more of like, okay, here's what's happened. Here's what we think. So like Shell's a great example, guys. Shell Oil, last year they did about a 3.93% increase, and they kept it about the same. It was a 4% increase this year. And so this is kind of representing some big energy, some big oil. Bert, I know you were talking about Chevron before we jumped on this.
Yep, that's absolutely right. Chevron this year announced a 4.9% increase. Last year it was 7.9%. So it's a little bit lower than expectations, but still a moderate dividend increase like you saw with Shell. So it's pretty low single digits is what we're seeing.
Yeah. So, I mean, that's the only energy, those are the only energy companies we're going to talk about here. So I feel like it's going to be pretty mid when it comes from energy stocks. Don't expect, booms on the dividend growth. I think you're going to get that 4 to 6% dividend increases, especially when, Exxon comes around. I don't know when BP comes around, just be prepared for some pretty not bad increases, but not like, oh, hell yeah, dividend increases.
Yes. All right, let's move into a different sector here with Archer Daniels Midland, ticker symbol ADM. This one was interesting. This year they announced a 2% dividend increase compared to last year. It was 11.11%. And that was the funny one, Lanny, because that one happened right after an accounting scandal. So you figured things couldn't be much worse, and they were doing it. But 2% this year makes sense given some of the headwinds that you're gonna see.
Yeah, with that, they've had a bunch of other errors, I think, after the fact as well. Plus, I think they produce a lot of the corn oil and corn syrup.
Yeah.
And that's been a target, obviously, within food, so there's a little bit soft here. So, when you think of Bunge, you think of, again, this is going to really tie in with the next stock as well. But, anything in that unhealthy, health related area, it's going to be some pretty low dividend growth if we're lucky.
Because you don't really know what the next 4 years are going to bring for this sector. So you can't just go juicing up your dividend if you're going to have major implications to your financials down the road.
Yeah, it's a lot about cash, staying liquid and nimble, in case you need to create new products, pivot to another, you know, segment within your portfolio. So that was ADM. Again, 2% increase, 1 cent versus an 11% banger last year. But guys, we're going to slide into another dividend king here, one that I think everybody owns. I'm talking to you guys out there. I'm talking to Bird. I'm talking to me. We're talking PepsiCo, guys. So, this was one of those stocks that has taken a dump. Just with, yeah, it's taken a
Yes.
big one. Just sat on the toilet and just,
Yeah, I mean, nothing to it. That's sadly the way to do it. And what you're seeing is a lower dividend as a result. This year's increase is 4.98%. That's down from 7.11% last year. So it's lower, and it's still below that 5 year average too, which is in that 6 to 7% range. So even Pepsi is pulling back the reins a little bit.
Pepsi's pulling back the range. Payout ratio is getting a little bit higher. A lot of uncertainty around, RFK coming in, plus tariffs, plus,
Mhm.
what's going to be taxed and not taxed coming in and out, because they do a lot of international, global,
Yeah.
production here, guys.
What's going to be interesting with them, not them, their counterpart Coca-Cola, who absolutely crushed earnings in this
They
last week.
crushed it.
They're going
And
to be
we're waiting
announcing
that
it.
dividend
Yeah.
increase. Yeah, any day, right?
Yeah, so if you want to, we'll see how this video and this message plays out when Coca-Cola announces too, because I'll be really curious if Coke, ticker symbol KO, announces a small dividend increase too.
Yeah. So we're kind of piggybacking on ADM, in this industry, softer growth more than likely. When you think of possibly your Mondelez, your Hershey's, your obviously, I'm trying to go down the line right now. What are
There'll be
some
what
more?
Hormel will like,
Hormel, if we're lucky.
yeah.
Yeah, if we're lucky, Smuckers.
Yeah, Smuckers is getting a little beat down right now. Nestle, there are so many other of those. Yeah, the big major food manufacturing companies are set for a really tough couple of years as you're going to
General Mills,
yeah, you're going to see those expenses go up as you go to make food healthier.
Kellanova.
It
Had to say that name.
rolls right off the. I hate that name still. You're never going to get me to get on board with that. So let's move out of the food sector. Let's move into asset management, Lanny. We're going to talk about T. Rowe Price, ticker symbol TROW, the dividend aristocrat in there. Tell us about that dividend increase here.
Well, we got to start with last year, which was 1.64% after beating in the market. Remember, guys, that they took probably 2022, was
Yeah,
it?
they did. Yeah, we loaded up on it. It was a yeah when it was just hovered in the high 90s, like 90s and 80s for a little bit. Yeah, it was this is a tough stretch for T. Rowe.
So, they announced last year 1.64% increase. But again, the market did very well in 23, did well in 24. Um, so, Tiro did announce a better dividend increase, right, Bert?
Let's go. Let's go, Lanny. They announced a better dividend increase.
Yeah,
Let's
about a
freaking
50% higher increase than last year.
just cut it right
Sounds
there.
great.
Yeah, that sounds fantastic. We don't need to really feature that it was only a 2.42% dividend increase. It was a 50% dividend increase compared to last year. Freaking beat that, everybody.
So this is Tiro, guys, who doesn't have an ETF or a fund tied to Bitcoin or any other
Super.
digital currency. So, not to say that that could play into it, or maybe they're just modestly coming back to stronger dividend growth now that, because the market's been roaring. And, again, most of these asset management companies, such as T. Rowe Price,
Mhm.
make money off of market value. And the higher the value, the more the revenue.
Yep.
But there's a lot of uncertainty with all of the pullbacks and all of that
Mhm.
stuff that could be happening this year.
Yeah.
Again, if it sends companies down and stocks down, that could have a forward poorer look for T Rowe.
Yeah, I agree. So it'll be an interesting one to look at. And I know a lot of the comments we'll typically get are how many people actually pick T Rowe funds to invest in. So I think it's an interesting comment, but it could also be part of the reason why T Rowe's lagging right now, I should say.
Yeah. But now the next one, Bert. Oh, this is a fun one.
Mm.
So again, for the asset
Mm.
management firms, they'll probably, I think it's going to vary, to be
Yes.
honest,
Yeah, probably
based
tough
upon
year for Ben. I'm trying to think through some who the big ones are, right? Like Ben,
that.
tough year. Didn't BlackRock announce their dividend increase?
I thought it was soft, right?
Yeah, I'm just pulling that up right here quickly. They announced oh, for God's sakes, 2% dividend increase at the end of January. Yeah, so
Yeah.
there you go.
Yes. Now, the smaller firms, I'm curious what Jackson Financial, everybody knows I own a lot of that. I'm curious what they're going to do. Um, but let's slide
Yeah,
into logistics and delivery, guys, with United Parcel Services, UPS. We all know the tough time that they've had, losing so much value, exiting the Amazon business as well so they could focus on higher margin business. And they had a 0.62% increase last year, 1 cent, and this year they kept it the same, 0.61%.
yeah. So I mean, UPS is. We called it though. We talked about it in a video a couple weeks ago after they dropped 14% after earnings. It was a tough one. We knew it was coming. So interesting, Lanny. You want to know a funny thing for the next company that's on here? I was dis. I read the dividend increase first, and then I saw what happened to the stock, and they did not match the expectations for what I was thinking. Cisco announced another crappy dividend increase of 2.5% this year, um, in line with their 2.56% last year. I had no idea that their earnings actually crushed it. I didn't even see it. They had a fantastic earnings release, fantastic outlook, and the stock price shot up. And I'm like, come on, where was it on the dividend increase front?
Yeah, maybe they don't know how sticky that recurring revenue is or how well they'll continue to do, but they kept it 1 cent just like last year on Cisco's dividend, guys.
Yeah,
2.56% last year, 2.50% this year. So I think if you're in a lot of the hardware space, maybe partly into tech, um, very curious what this means for some of the tech players. I mean, Meta just increased the dividend today, guys. We're filming this on
yeah,
February 13th, and that was only 5%. This is Meta we're talking here. So, very curious what this is going to mean for the Apples, the Googles, and yes, the NVIDIAs.
yeah, and the Cisco's. No, I'm kidding, but yes, I agree. We don't know how tech's going to shape out. There's so much that's going to be shaped with policy in the next 5 months that could drastically change a lot of things. So it'll be fascinating. This next one, Lanny. This one was interesting. Why don't you talk about this one?
Yeah. So, we've been really featuring Elevance Health on our channel. The health insurance, one of the big health insurance players. They've always historically had a lower yield, low payout ratio, high as heck dividend growth.
Yeah,
It was 10% last year, but only 5% this year, or 4.91%. And that's because all of the Medicare, Medicaid reimbursements that they're going to be not be getting, and the caps that they have, plus just the concern within the healthcare industry in and of itself. So, to me, kind of, I just feel like healthcare and pharma are just not going to have good dividend growth years.
yeah. I have nothing more to say. I agree with that take. So let's move to the last dividend increase that we want to feature. Iron Mountain, ticker symbol IRM, announced a 9.79% dividend increase
Awesome.
in line with their 10% last year. They were up 42% over the last year, so it's not surprising at all that the best dividend increase that we saved for last was Iron Mountain. Because, I mean, even though they offered soft guidance, the stock price dropped 7%. The need for data centers, the need for everything, they are in the sector.
Cybersecurity, cloud storage.
Yeah, it's the right smack in their wheelhouse. So they are set to benefit. It's great to see that they had that 10% dividend increase, and this would be the sector that you would see strong dividend growth from, in my opinion.
Yeah, I'm very excited. Not sure if it's a REIT thing or if it's a cybersecurity thing, guys. What do you guys think about the industry of REITs? We'll have to really see.
Yeah,
Obviously, we assume O is going to continue to do their traditional thing.
throw them out of this.
Yeah. But what is will healthcare REITs
Yeah,
suffer this year, or will they be just like Iron Mountain? We'll have to see.
I'll leave all you in the comment section with this thought to go into it. Iron Mountain announced a 10% increase in a high interest rate environment for a REIT. So think about that. That must tell you what you need to know about that sector.
Yeah.
All right.
No, guys, we did have two dividend reductions here. First off, this really speaks to anytime we talk about a dividend stock that is at or near or above 100% payout ratio,
Mm-hmm.
chances are that dividend is going to be right sized. And that's exactly what Wendy's, ticker symbol WEN, just did. They just announced today, the 13th, a 44% dividend reduction.
They cut the squares off their patties, Lanny.
No.
Wendy's had been riding high with the payout ratio for a long time. I think we talked about it in this channel at some point in the last year that Wendy's is one of those companies that might see a dividend cut because of that high payout ratio. They did, but when we were talking about it before the video, you brought up a good point with it, Lanny, that they really want to hit that target payout ratio. So it's more of a proactive cut to get them down to a reasonable dividend. So it's not,
Yeah, they've had a few cuts in their past during COVID.
yeah,
They've just had a spotty now dividend history. I'm not sure what the impact will be because I think restaurant brands just had a nice increase.
yeah,
So it seems like if they manage the payout ratio and cash flow well, you'll be okay.
yeah,
So I assume McDonald's will be just fine.
yeah. I
Um,
agree. I wouldn't extrapolate Wendy's experience to the rest of the industry. I think it's more
yeah,
unique to Wendy's. I agree.
especially with low cost menu being back, the value menus kind of being back. I don't think it's an industry thing.
No, I don't either. And last but not least, Walgreens, ticker symbol WBA, suspended that dividend. It's gone. Forget about it. Walgreens just can't get out of their own way right now. They couldn't find someone to acquire them. Stores are not performing well. They're closing it. It's just been a tough, tough stretch for Walgreens. I've nothing more to really say. I think,
Yeah, yeah. I think I know CVS had a good
well,
quarter.
murdered it.
Uh, but keep your eyes glued still and try to really think about that. Quasi retail healthcare again, another similar healthcare company here.
Yeah. So, all right, everybody. These were the dividend increases that we featured. We talked about some sectors to see the one sector that really jumped out to us is one that could benefit significantly this year is that data center. Going into the data to that world, we're going to see
Yeah,
some.
you have what do you have? What's your one big the towers?
Oh, American Tower. They're more cell phone tower though. I'm not
Right.
expecting.
Yeah.
I don't know. I'm not. They're not. They have data centers, but they're not a data center REIT. So I'm not expecting much from AMT this year. It's a good call out though.
Yeah, figured just to throw it out there. But guys, I think energy again is going to be pretty much average or mid. Be on the lookout for unhealthier consumer goods stocks such as the Pepsis, the ADMs. We'll have to see what Coke does. But again, we've already listed out a bunch: General Mills, Smuckers, Mondelez, Hershey's, Nestle. Might be a little bit softer than what it usually is. So those dividend growth rates may not hold up this year. But let us know what you guys think. How many of these stocks do you own? Which ones are you worried about? And which stocks are you buying here in 2025?
Let's go. If you haven't already, subscribe to the channel. Give this video a thumbs up. And Lanny, I think there's one last thing we have to tell all the Diplomaniacs out there.
Oh, you listen up, brother. You're either with us or you're against us, Jack. That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.